Welcome back for another weekend deep dive. My name is Justin, and this weekend we're going to try to figure out, is the stock market crash 2021 underway? Goldman Sachs predicted that we could be declining on the S&P 500 by up to as much as 17%, down to about 3,500. And in this weekend's video, we're going to try to figure out whether or not there is any legs to the story, as we're seeing the price action on Friday getting a little bit volatile, or if we're going to follow through with their scenario 2 and actually rally into the end of the year. So I got a lot to talk about this weekend, and I'm very much looking forward to this video. So again, let's just read the headline here and see what they're talking about. Goldman goes through second half scenarios that could lead to a 17% S&P 500 drop or a continued rally. So what's very interesting here is that, again, 17% decline, and this was published on June 28th. Here we are about 2-3 weeks later, and we want to know, are we on track for that 17% decline, or are we potentially going to be going higher into the end of the year? What are those targets? Well, we reviewed this 2 weeks ago, and the reason why I think it's important for us to focus on this weekend is because on the last weekend's deep dive, we were talking about whether or not we should be buying or selling with the assumption that the stock market crash is over. So now the question is, if the stock market crash is back, what would that look like? Where would we go? And how can we be prepared? So just before we dive in here, I want to thank you very much for, again, always smashing the thumbs up, subscribing to the channel, and supporting us by dropping a comment. And what I want to do is give you a big thank you this weekend. What I want to do is actually thank you for, this is our second channel. And I hate to say it, but it took me like 6-12 months to gain my first 500 subscribers on my old channel, Blaze Capital. And on this new one here, it's taken us less than a month. I'm pretty confident we're going to break 500 by next week. And as a thank you, what I would like to do is actually offer a $100 Amazon gift card, 100% for free. All you need to do to qualify is to smash a thumbs up, drop a comment, and the most liked comment is going to receive that $100 Amazon code. On next weekend's video, we will circle back, announce the winner, and we'll reach out to you to make sure you get your prize. And I would like to continue to do this as we hit milestones on the channel. So please support us. We would love to give you my money. Please and thank you. So again, apologize if there's a little bit of clickbait in the title. The reason why we did that is because I think that with the price action on Friday and the price action on Friday being a big red candle, oh my God, the boogeyman's back. He's back. The boogeyman's back. And everyone is now, again, feeling like, oh my goodness, this is it. This is it. We're clearly above the 50-day moving average. We're pointing up, but we can't keep going up. There's no way we can keep go up. There's no way. So what we want to figure out is, again, should we be worried? Where should we be worried? And everything in between. So let's try to tell the story here in about the next 2-3 minutes. And then we will circle back and do our normal weekend process. So 17% drop, right? That's a pretty big crash, right? 20% is considered bear territory. And from where we started, so again, this article from Goldman came out here in June 28th. So we have a look right here. So from June 28th to the top here, we rallied by about an extra 3%, roughly 4,400. And as we sit right here, we're actually currently above their level by about 1.3%. So we're still higher than what they were than when they published this article. And what's really interesting here is that halfway through 2021, the S&P 500 is back at a record and sitting just 1% below Goldman Sachs' year-end target. Oh, their year-end target. Yes, December of 2021, right? We're in July right now. They're talking about December of 2021. The firm went through various second-half scenarios related to inflation, interest rates, and tax policies that could change that outlook. Goldman's base case, again, assumption, this is their most likely scenario, is for the S&P 500 to rise slightly to 4,300 by the end of the year as inflationary pressures ease, interest rate climbs, and a portion of President Joe Biden's tax proposal become law. However, since nothing is set in stone, Goldman's breaks down 3 what-if scenarios where each macro assumption plays out differently in how it will affect equity returns, earnings, and valuations. So, before we go further, what I'm trying to say is, again, we're currently still above Goldman Sachs' target. Goldman runs the market. Let's be frank, right? They run the market. Our base case is that by the end of this year, we're going to be at 4,300. We're going to slightly go up. What do? Well, we went up more than a little bit slightly. We broke through 4,300. We went to 4,400. And now we're back testing 4,300. Is this really that bearish? No. We're above their target that they set only on June 28th. I think that's bullish. We're back testing the area they talked about. What's interesting here, though, is that we're not rallying based on what they assumed. So we have to try to figure out whether or not there are legs to this, or if there's going to be something else that comes. So the first thing we're going to talk about is going to be the bear scenario. The second thing we're going to talk about is going to be the bull scenario. And then we're going to try to figure out what exactly is going on by looking through our normal process, which includes going through, having a look at the SP 500 summary, the heat map, the options chain, the seasonality chart. Probably going to skip that one for this week. I got something else I want to look at instead. Economic calendar, ETF reviews, including Bitcoin, stock market news, and SP 500 charting. So the easiest way to try to summarize this is if the stock market crash of 2021 is coming, did Michael Burry predict this? And are there warning sounds out there, again, from some of the sectors, including meme stocks? Meme stocks were under significant pressure today, and Michael Burry called that out. So let's see if he's right. So just quickly skimming down here to their what-if scenario for the bear case. And here we got, again, 35.50. 17% below current level. So that's going to be lower than where we are now. And again, let's look here. So if we topped out now, again, if the top is in for the entire year, right? If it's in and we go down to that 35.50, we actually have to expand the chart out because we can't quite see that. So from our all-time high up here at roughly 4,400 all the way down to about 35.50. Right, that's a drop of, 19%, 19.2. That's almost a technical bear market. 10% is defined as a correction. 20% is defined by a bear market. So let's look here and see where 10% lands us. 10%. That's like just below 4,000. Like people would get scared if 4,000 broke. Yes, and we're going to be getting very close to what? Strong support. So I wonder what people are going to be doing when we hit strong support, that 200 DMA. If we're on strong support, we be selling. We buy high, we sell low. We don't buy on support and sell high. I'm making a joke here if you've been following our channel for any length of time. Ironically, people love to sell on strong support. So they love to buy when everything's up. When things come down back to earth, like the Virgin Galactic space stock this week from Richard Branson's launch, right? Came back down to earth faster than his descent. So when these things come down hard, people are going to be selling on strong support. So that's what I'm assuming here, and I'm wondering whether or not it's likely going to happen. That would be a sizable decline. That would be nearly a bear market. 20% would be the bear market, just below 4,000. So there you go. That's the bull case. Let's go back to here. Let's close this. Let's go here. Let's go here. Let's go here. So their bear case relies on one thing. What if interest rates fall or rise more than expected? Goldman forecasts the 10-year Treasury yield to rise to 1.9% from by year end, which will allow the S&P 500 price to earnings ratio to remain at 22. The benchmark bond yield started 2021 below 1%, and as the economy bounces back, the rates jumped to trade above 1.7 at one point in March. The 10-year yield last traded just below 1.5. If rates were to overshoot Goldman's forecast and finish the year at 2.5%, the S&P 500 would have a fair value of $35.50, according to the bank's dividend discount model. Higher growth tech stocks could be under pressure, particularly as higher rates reduce the value of future cash flows. So the reason why this is interesting is because we're getting some conflicting data here. And actually, I want to find more article here. Here we go, because this is from 3 days ago. So we're hearing updates from them, and we can go through and try to figure out what's going on here. So they said that if this line points up, the 10-year yield, that is going to add pressure to tech stocks. So let's look here. It went up. Now it's coming back down. At the time this was published, it was trading just below 1.5. And they said that if this line points up, the stock market is going to do higher, but tech stocks are going to be under pressure. Well, as we note here on the heat map for the last month, right, tech stocks are pretty bright green. Apple, Microsoft, Google, Amazon, Tesla, pretty bright green. So with that bright green scenario, what that tells us is that this should be down. It is down. So at the time this was published, it was trading at 1.5%. It's trading at just below 1.3. So looking at year to date, they were talking about it rising up here to 1.5 and then coming back down here to about 1.3 as we sit here. It's ticked down by about another 20 basis points, right? 0.2, 1.5 to 1.3. So they thought this is going to rally into the end of the year. So the fact that this is actually going down is actually adding a boost to tech stocks. Why? Well, because this means that people are bidding it up. Why? As they bid it up, it actually goes down. It goes higher when people are not to overcomplicate it. If this line points down, tech stocks go up, and tech stocks have been going up. And the easiest way to try to look at this is by looking at a comparison here. So we can have a look here at the DAX, and again, the DAX is going to be the German market. So over here we got. Let me just get this a little bit easier here to see. Why isn't this one here pulling up the lines that I had on here? This is interesting. I know that I have them on here. Yeah, oh, whatever. Anyways, so I have it over here. No, something went wrong here. There we go. Okay, now it has it. Anyways, looking here, what we have is the DAX, which is going to be the German market. And then over here on the right-hand side, we have RSP, which is equal weighted S&P 500. So equal weight just means that SPY, so looking at SPY here, right, let's pull up SPY because there's SPY and RSP. So right here I have equal weighted S&P 500, and then over here, SPY weighted S&P 500. We can see that S&P looks closer to the DAX, but RSP, which is equal weight SPY, is actually starting to show some softness here. It's losing the 50 MA. DAX is just touching it. It's actually on the upper uptrend right here. And then over here, we're actually losing the secondary uptrend. So the reason why this matters to me is because SPY looks a lot more like the DAX. And because that the S&P is rallying, it means that all of these blocks collectively, we see here that Apple's block size is bigger. What that means is that it weighs more. So when Apple goes bright green, the same number of companies in block size can be offset by this. So when we see that Bank of America is pretty red, well, for Apple, it's up 12% and the block's a lot bigger. It drags the S&P up. When the blocks are all the same size, or RSP, equal weight SPY, it tells us that the average S&P 500 equally weighted stock is actually below its 50-day moving average. So it's actually trending down in the short term. So that would be a warning sign for the bears, for the bulls, right? Equal weight S&P 500, non-NASDAQ 100 or trillion-dollar companies are showing some signs of weakness. And the reason why this matters is because we're not doing what Goldman said here. So they were saying that if it was to rise, right? So let's read it again here one more time. Goldman forecasts the 10-year Treasury yield to rise to 1.9% by the end of the year. We're currently at about 1.3%, which will allow the S&P price to earnings to remain at 22 times. So what it means here is that people are buying Treasury notes and they're not buying stocks. So when this thing goes down, people buy tech stocks and they sell S&P. So if this line starts ticking back up, that's something we have got to pay attention to now, right? The 10-year note. So that's the bear scenario here. And the reason why this is very interesting is because we have an article here from 3 days ago where Goldman says, don't bail on the big tech giants because of antitrust fears. 3 days ago. So what's interesting here is that they're kind of confirming that this line is going to keep pointing down. They're saying, hey, we're at all-time highs, but don't give up on those big, strong companies. Big tech investors have little reason to worry about the Biden administration antitrust efforts and new executive order, according to Goldman Sachs. So I don't want to go through and read the entire article, but again, just read the headline, right? Don't sell tech stocks on Wednesday the 14th. Okay, very, 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 very interesting. So if that is the current scenario, then we want to think about what does that mean for us? What does it mean for us as investors? Because if we know that we can just look at this and get a very good predictor of whether or not tech stocks should keep going higher, that's very good for us to know. And the most important thing that I'm going to be watching into this next 2 weeks is going to be, where do I have it here? 1 second. It's going to be big tech earnings. So having a look here at big tech earnings, they really kick off in about another week. Not this week coming up, but the following week. So they really start coming up the following week. And we have a look here. So again, I'm qualifying big tech earnings, and Goldman saying, don't give up on these guys. Don't give up on big tech earnings. All right, don't give up on big tech. So Apple reports on the 20th, Netflix reports on the 20th. They're big, but like they're not really the trillion-dollar company, right? They're like 500 billion, something like that. Not quite at the trillion level. So we got Apple. All right, we got big tech earnings week here. So we got Apple. We got Facebook. We've got, where's everybody else? These are all the ones that are currently confirmed. So maybe some of them are just not confirmed yet. Where's Amazon? We don't have Amazon confirmed yet. Normally they'll report in the same week. We don't have Tesla yet either. Okay, well, we got Apple here confirmed and Facebook. So the following week is when we're going to start hearing from the big trillion market cap companies. So interesting. And I think the other ones are scheduled here. I'm not quite sure why I can't see them. Maybe my eyes are just not working. Facebook, Boeing, Twitter, Snap. That's all this week here, though, coming up. Let's have a look here at Microsoft. July 27th. So, right, it's confirmed. Looks like this might just be like an older calendar now. Looks like it is confirmed here. So we got Apple on the 27th, the same day as Microsoft. Interesting. All right, what about Amazon? The day, 2 days after? Okay. Facebook on the 28th? Okay. And then Tesla on the 26th? Okay. So Monday the 26th. And we're expecting a miss. Elon was also talking about the Cybertruck potentially being a flop. So, I don't know. Looking interesting. And who else do we got? Google. Oops. Google the 27th. So 26 to 28, right? That's the big boys. That's all the big boys coming in. So what they could try to do is to move them lower into this week to shake people up before earnings, and then they all beat. Let's look here. So Google not available. Tesla miss. Not a $1 trillion company. Facebook beat. Nice beat. 44-cent beat there. That's nice. Amazon, yeah, it's going to beat by over $2. Let's go, Andy. Microsoft going to beat by 10 cents. Apple's going to be beating here by 17 cents. And again, those are all beats. So if Goldman's saying don't give up on these $1 trillion companies as they're all at new all-time highs, and they told us if this continues, meaning this keeps going down, that's going to add pressure to the S&P, and it's going to boost tech stocks. Well, that's exactly what we're seeing, and they're telling us here. One more bull article here we can look at is this. The bull market will get a $500 billion cash injection by year-end, Goldman says. Now we're going to shift gears and talk about the bull scenario for a few minutes here. And I realize this video might be a little bit longer. What I'm trying to do is lay out both scenarios here. So I'm going to share this Goldman article for later, and if you guys want to go through and read it, please do so. I'm trying to go through and synthesize what it means so that we can do like a 30-40 minute video instead of me going through and just reading articles. Let's try to figure out how we can actually action this to make money this week, or this next 2 weeks here. The bull market will get a $500 billion cash injection by year-end, Goldman says. And this was 1 week before that June 28th article they published here. So American families and professional money managers will drive demand for stocks for the remainder of 2021, plowing $500 billion of cash flows into equities through year-end, according to Goldman Sachs. What are people going to be buying? When do you think of buying stocks? Do you think of buying, oh yeah, General Electric. Oh yeah, can't get enough of that. Love that Honeywell. Love it. Can't get enough Honeywell. TMO, ABT. Right? You guys aren't thinking about that. You guys are thinking about Tesla, right? Tesla, Amazon, Google, Facebook, Microsoft, Apple. Whoop! And what's Goldman saying? Yeah, let's go. Let's go. This right here is 3 weeks after they had this article here talking about the money coming in, right? Money's going to come in and boost these things up. Let's go. Come on, David Costin. We estimate that households currently allocate 44% of their assets to equities, slightly below the all-time high allocation of 46% in 2000. But high cash balances and continued retail participation in equity markets should bolster household equity demand. Specifically, Goldman raised its forecast for 2021 household net equity buying to $400 billion from $350. Kotza noted the U.S. equity inflows are on pace for their strongest first half of a calendar year since at least 2007. Partying like it's 2007 to 2008 and 9 crash. What? 2 years later, right? 1.5 to 2 years later. When are we expecting the Fed to raise rates? In 2023. What is it right now? It's mid-2021. What does that mean? 18 plus more months of easy monetary policy. Did the S&P go higher between 2007 and 2009? Let's check, right? Because whether we like it or not, Jerome Powell delivered for us this week, right? We keep saying there is potential for us to go lower, but has it materialized yet? No. And should we be scared? Well, that's up to you. Should you be scared? I don't know. So here we are. Where's 2007? Partying like it's 2007. So whether or not we actually have the capitulation move here, we'll look and see, right? So Strong red bar, right? All the way off the bottom, punch it up, double top, sell it off. Well, right now we're likely setting in our double top for the continued move higher, meaning we're currently putting in the first top here that we're going to come back down and form the other top later, or the lost decade according to Ray Dalio. Why? This is a yearly chart. It's clearly pointing up. We're at the like basically at the record here, and from 2007 through to 2009, let's look and see what happened here. So 2006, power pump year. 2007, yep. 2008, oh, 2009, yep. So we're going into that 2007, 2008 area. Yeah. So you want to talk about the bear market crash? Yeah, there you go. All right. So switching gears here. Specifically Goldman raised, there we go, blah, blah, blah. All right, that's the one thing there. And then the other thing I want to talk about here is the stimulus from the government. Oh, look at this, right? We're in a liquidity-driven rally, but getting more liquidity cannot make the lines point higher. U.S. Senate Majority Leader Schumer announces he will file motion Monday to set up procedural vote on bipartisan infrastructure bill for Wednesday. This is really important here. So again, it's going to file a motion on Monday for a bill vote on Wednesday. Schumer sets deadline of next Wednesday for Democrats move forward with $3.5 trillion budget framework. This is likely going to be the last big flush of stimulus we're going to be getting. And then we're going to be starting to focus on tapering. And again, Jerome Powell said this week that we're not really close to that. I don't really want to pull it up, right? The guy's been steady as usual. Eventually they're going to raise rates. As of right now, they've been saying that right, we haven't seen substantial progress. We're seeing some delta, right, some delta concerns, and we have to just wait and see what's going to happen. Need more data. That's what we need. We need more data, and that's what I love about the Fed. Yeah, I need more data. Steady. Eventually, they're going to say that we are thinking about. We're actually going to do it. We're actually going to do the tapering. They're going to taper first. They'll raise rates after that. So this is likely what's going to be driving this next week. And then after this next week, then we're going to be focusing on those big tech earnings. And again, this week right here, from 26 over to 28, we're going to hear from the trillion-dollar company, right? Apple, Microsoft, Google, Facebook, Tesla, Amazon, all in the same week after we hear about the stimulus. So by the 21st, which is going to be Wednesday, so on Monday, Schumer files that bill. By Wednesday, we get the vote. And then after that, we're already like into big tech earnings, right? Netflix, Chipotle, Halliburton, IBM, right? We'll have Coca-Cola, Johnson & Johnson, a little bit of everything. Then we got Twitter, Snap, Intel, AT&T. This is it. This is big tech earnings, right? This is the big time. So if they manage to walk it down or walk it up into big tech earnings, that's what I'm going to be watching for. So that's your bull case now. And now let's shift gears and get on with the show. Let me also know, again, if you wouldn't mind smashing a thumbs up, and as you're dropping a comment, just say whatever you want. It could be a comment on the video, it could be feedback, give you what you think is going to happen with this market ahead. Let me know what you think of this format, where I'm spending more time just trying to talk and explain than to just jump straight into the technical. Sometimes the technicals can be a little bit overwhelming, and for this week, I think that we talked about the potential for Jerome Powell to move us down into Wednesday, whether or not it was driven specifically from Jerome Powell's comments or not. Going into a monthly OPEX, which was Friday, we have to expect some volatility or chop. We're in the chop shop. Sell in May and go away. Why are you surprised you're getting chopped up? You're trading in the chop shop. Oh, that's right. So we've been saying all along. It's what we have been saying all along. So S&P 500 summary is now pretty much done. The heat map. So again, I think that I've explained things pretty well here this week. So the 1 month performance here pretty much signals what's going on, right? What's been working year to date has been like energy. Yeah, it's pretty red. And then trillion dollar club is back in focus here on the 1 week. Again, there's a lot more red than there is green. It's pretty mixed though, right? Same theme though. Managed to take Amazon down, Facebook, Tesla down, chips down. Apple and Microsoft are holding up. Apple had a lot of really bullish news this week too, regarding again MagSafe chargers. They had the partnership with Goldman Sachs on card payments. What else did they have? The 20% production increase. That's pretty bullish for the biggest company in the world. All right, let's move forward here. So we've had a look at the summary. The heat map, the options chain. All right, so it took me a little bit longer to get all the stuff sorted out here. All right, so pulling this over here, I'm going to jump into the options clue thread here. And again, if you're a member in Slack, you can get access to all this stuff. If you want to learn more about it, just click on the link in the description and you can learn more. So click on the link to learn more about this. So again, what I'm looking at here are whether or not there are clues to confirm or deny our existing bull case. Let's look through here. Next Wednesday, so we got on Monday, we got the 434 call and 433.42 put. What does that mean? Pretty much at the money. So looking here, we got 434, we got a lot of volume. We got volume all the way up here to about 437, which means that they might attempt to push it higher. Over here on the put side, we've got equal volume at 432 and 433. That could just be them trying to work it into after hours or 4:15 in a Friday as they're scraping and cleaning all of those chains. On Wednesday, we got a 430 put. On Friday, we got a 430 put as notable. So right here, again, on the 21st, which is going to be Wednesday, again, they're buying puts. I don't know why. Maybe they're betting that this bill is not going to pass. I don't know. Maybe just technical selling, or maybe something else like the delta. I don't want to say the whole thing. I don't want to get in trouble. There we go. So that's the 230 here. So as we're getting that vote from Schumer, over here they're saying, you know what? I don't know. 428 would be the break even on these. Over here we got 436 with volume. But they're only worth about 40 cents, so not really all that important. 428 appears to be the important number based on these 430 puts. And then we got 430 puts going out to Friday, the 23rd, also notable. We got 43,000 here trading at about $3, so that'd be 427 break even on Friday. Again, what we're trying to figure out here is how do these guys get their money back and how do they make money? Well, we got to be below 428 and 427 by Friday and Wednesday and Friday. There's always call volume, right? There's always put volume too, but the theme here is starting to continue. So we see some bear activity coming in here, but then we see the follow through into the August monthly. So what I'm noticing is that we got a 440 straddle, we got a 410, 425, 410 put spread. And again, what that means is that the notable activity going into Friday or monthly OPEX is right now at least to the bear side. So over here, we note that for the August monthly, which is 35 days out, or the next monthly chain, we note here that we got on the 16s, we got a lot of volume right here at the 425 put area. Now we're going to look and see what happens everywhere else. Again, over here, we got the 440. So, right, if I zoom in nice and close, I try to do this all in one screenshot, so I'm not like putting side by side. It's just easier to scroll up and down. So right here, we got 440. So 32,000 in volume, 39,000 in volume. Here we got $11 in premium, 11.6. And over here, we got about $3 in premium. So the easiest way to figure this out is 11.65 plus the 2.79, right? Let's make sure we type it correctly. 14.44. So then we go 14.44 minus 440. And now we know that we're looking at either 425 as the break even for the straddle, right? We take both sides of premium, add them together, and then we have to be either below or above that area for them to pay out. And now we add it on. So we got 454.44, or we got 425 as the break even. If we stay within 425 to 454, they don't make any money. They lose money. It's a matter of how much. If we go below 425 or above 450, then they get paid. So what's interesting is just that they're putting this on here and they're paying a lot more for this side. $12 here, $2 here. And then we see the stacks coming in. 1, 2, 3. So here we got 440, 425, and then 410. So what it appears like, again, we've got a straddle here, and then we got a put spread from 440 to 425 to 410. And then I believe there's continuation here, yeah. So 415, we got 412. We've got, right, volume OI here at 400. We've got volume and OI here at 395. We got OI at 395, 400, all the way down to 385. So again, what I noted here is just that, so we got that put spread. I should also just put that, put flow down to, right, 385. So like that's pretty notable, right? Yeah, put flow all the way down to 385. And all I'm looking at here is we're trying to track the money. So people always say follow the money. That's what we're trying to do. Where are these big guys putting money in? And then we look at the continuation into September. So we know 425, 454. That's a big range. September monthly. 440 call OI. 430 straddle, $20 in premium. So again, now we're looking at, again, 450 or 410, because based on the straddle plus the premium, we know what to look for. Puts down to 385. So for August, we got put flow all the way down to 385 here, right? 32,000. We look over here to the August chain, and we got put flow here down to 385 again, right? 385. There you go. Oh no, hold on. I made an error here. I was looking at the wrong one here, sorry. I was looking at the wrong screenshot. So this one here, the August monthly one, I'm just showing it that it goes down to 410. On the September one is where I went a little bit further. So on the September one here, we can see that we start at 440 with the open interest of 100,000, or the equivalent of 10 million shares. And then we see here that we got, again, looks like we got a straddle here and a straddle here. Where the volume's coming in though is right here. We got volume at 420, 415, and then we got continuation here. Hold on. Let me just make sure I got the right screenshot. So down to 385 here. Yeah, so taking it from 415, we got 420, right? 400, 395, 390, 385. So for September here, there's significant put flow all the way down to 385. Nothing was notable on the 25 ETFs list report that we create. Just ignore that if it doesn't make sense to you. And then this is the big money here, right? We've got 1.3 billion and 2.5 billion in volume this week. So I went through the top 25 indices, primarily looking at SPX, or the index. And what I noticed is that on Monday, and again, this is going into Powell on Wednesday and then after Powell on Wednesday. So it's really interesting. On Monday, they're buying a 4370, or basically so 4370 SPX, or about 437 SPY, with $200 in premium for a straddle. On Tuesday, 4380 straddle for September, right? They're not going to August anymore. They're going to September. Wednesday, same thing. So now they just buy the put side. Going into Powell, they bought some insurance, not a straddle, just put insurance. Thursday, muted. On Friday, 1.3 billion at a 3,000 straddle and 2.5 billion at a 2,000 call. And these are big dollars, right? So as much as we focus on SPY normally, this SPX has got a whole lot more money flowing into it. Oh, baby, is it flowing? It's gushing. Why? That's the big boy chain. We look here and just look and see what this means. So again, just looking at this this straddle right here. So again, what we're looking at is about 76.45 in volume, 76.45 plus about 6,980. So that means that we got about 14,625 contracts purchased, and we add on 2 zeros because we're dealing with options. So now we times that by the $202 roughly in premium. Yeah, that's a $295 million order. Yeah, that's a big order. So that one right there, 295 million. Now, these are hundreds of millions. These are billions on Friday. So what's really interesting about the one on Friday is that we see them here buying. Did I not show it here? Did I not attach it? Hold on. Derp. Oopsies. I think I forgot to attach it. 1 second here. Sorry about that. I should have had this prepared ahead of time. I apologize. I already see the video's dragging on a little bit, but that's okay. I'm going to do this one a little bit longer because I'm trying something different for the format. I'm going to start tightening it up to finish off here, but here we go. Top 25 indices. And I'm looking at this one here for Friday and then right here. So we notice all those big numbers right here. So looking at these ones right here. The reason why this matters is because, again, this is the really big clue here. These ones right here. So they all have 91 days to expiry. And let me just see if I can attach this in here really fast. And then we can go on with the show. Not quite sure I can attach it in there. Yeah, there we go. So these are the big orders here, right? So they bought 9,920 and they paid 1,347 for each. I did the math. It's 1.3 and 2.5 billion dollars, right? Oh my goodness. So that's really, 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 really interesting. So we've now heard the bear case from Goldman. We've seen the bull case, and now we're looking at where's the money flowing this week, right? Week to date. This is where it's going. As we continue the story here, we see that SPY week to date. So what's really interesting here as well is that, again, this is what retail is going to be looking at. Retail is going to be looking at this. They don't look at SPX. They're not smart enough to do that. So over here, we're looking at orders that are week to date that are larger than $100,000. We see here that we got large orders, right? Including, they're mostly puts. So we got half and half up here. If we look at it, 47% put flow, 53% call flow. What we have to also keep in mind is that the people who are underwriting those SPX contracts can either go by SPX or SPY to hedge themselves. So when we note a lot of these individual orders here, they could just be them buying insurance to cover the exposure of the hundreds of millions and billions of dollars of premium they're selling on SPX. If that confuses you, it might just mean that they're buying this not to bet against the S&P, but to protect themselves. Why? The levels match up here. So the biggest orders are going to be at the top here, and we see that we got December, right? Then we go here, we go to, so December, then we got September, and we got October 20th, and then we got September. So the reason why this matters is because these mostly line up with those same strikes that we're noticing on the SPX and SPY. So I think this is just mostly insurance because of the dates here, right? We look here, September, July, right? 2021, 2022. So that's interesting to me. Then I look here as well, Monday to Wednesday. These are sorted by expiry. So sorted by expiry. Here we're looking at what is going to be good through, let me just see here. I think these didn't all properly attach here. Yeah, sometimes they don't upload properly in order. Here we go. So 719. This is going to be like going into Monday and Wednesday. It's all puts. It's all the same thing, right? 430 for 432. And then we look out here to after. This is busy. You see a lot of individual orders here. This is for Wednesday. So what's interesting here is just that the 723, they're buying the 437 hard, right? They're buying millions of these, right? 23, 7,000 in volume. 28, 40,000, all pretty much on that same strike here, 437, right? There's tons of volume, tons and tons and tons for Wednesday. What I was expecting for Schumer. The ironic part though here is that, again, Friday 437 call had about $3 in premium, implies 440 by Friday, and a sizable money. Place those bets on 713, and they appear closed out as we're looking at the OY into Friday, because we look here and there's not enough open interest to justify that number. Well, we can see they also got a huge haircut, right? They lost $1 when they were worth $1.50. They've dropped down by 2/3. So it looks like these guys were actually able to position out of it. So they traded this big time. Looks like they sold into Wednesday or something. They were not in the money, but they still closed out. Very interesting. Very interesting. And then looking here to SPX, we see a lot of the same information here. So we look out here to, I don't think it's uploaded in order. Here's Monday. So again, Monday, it's mostly puts. It's notably mostly puts into Wednesday. We note right here, right? $23. So the number seems small, but like those are worth $23 each, not $2. That's like 20,000 in volume. Right here, looks like they got a spread down to 4,300, Goldman's target. And then into Friday, big stack here, right? Big stack, 15,000. So that's a 35, how much is that? That's a $35 million order. So what I'm trying to show here is just that, again, if we're looking for a bearish continuation, pretty much seeing it. Bullish on the $1 trillion company, bearish on the overall market. All right, looking at the clock, we're at 38 minutes here, so I have to start going faster here. Bloomberg markets, let's have a look at this really fast here. Net change, so 1 month change, still green for America, Europe, all red except for the DAX, which we're primarily looking at ourselves, and then in Asia, all red. So we're here by about 0 to 3% red, and here they're UK is just flipping red, and then 1 to 5% red here. We're coming off less green here, and all green on the 1 year. So the trend here is that the world is selling off, the US is selling off, NYSE. I want to see what happens here, whether or not this actually holds green, and if it does, that's good. If it doesn't, that's bad. Because now it means that there's 2,000 stocks in the NYSE, NYSE. And if we have a look here, is it above or below the 50 DMA? That's the question. Why won't you show me the datas? We're losing the 50-day moving average here. So the NYSE is now also below. Got higher lows, but it is below the 50 MA. So the trillion-dollar company is really doing its heavy work here to lift up the market. Okay, economic calendar. It's very muted this week. So again, we're focusing on big tech earnings because this week ahead, it's pretty muted. There's not a whole lot going on, right? Calendar's pretty bleak here. So this is good for us because we don't like having a lot of economic data. It means potential for us to be moving. I think jobless claims will be in focus. ECB press conference will be in focus. So that's into Thursday. ECB press conference, they've been saying that they're going to be announcing policy change on Thursday. So we're probably going to be looking to see what happens to the DAX into Thursday. And we're seeing that bearish continuation into Friday. So the US might be announcing fresh stimulus. And the reason why that could be a concern is because maybe Europe's going to do something to counteract that. I don't know. But what's really curious to me is when I look at DXY, and I have a look here at the one-day chart, I throw my lines back on. If we're expecting $3.5 trillion in stimulus to be coming, like why is the dollar breaking out? It should be breaking down. And we look here, we got a big W, bullish, right? We also got a cup and handle here. It's forming, we got the handle forming, just has to break up, and it's already poking over the white line here at about 92.6. So it appears like it wants to go up. So something's funky here. Either we're not going to get stimulus, or something's going to happen in Europe where they impact the dollar. If they print more, dollar's going to want to spike up, even if there is going to be stimulus, it appears. That's bizarre, but it looks like that's what's happening. So on Thursday, I'll be watching the dollar as well. The dollar's likely going to provide clues for us. So all it means is that Wednesday into Thursday is the potential, because at 8:30 a.m. is when we're going to be having this happen. 8:30 is pre-market, so you have to be positioned going into Thursday, not on Thursday. ETF review. Let's look at the ETFs. I think they did a great job of crushing sentiment going into this week as well. So, right, kudos. All right, indices. Let's have a quick look here. I'm going to go through fairly fast just for time. I'm going to post all this stuff in Slack if you guys want it. XLE is breaking down. It's been a terrific trade. It is starting to break down. It is stomping it here, right? It's getting a crush. It looks pretty weak. The reopening trade appears to be losing some steam with the new variant being in focus here. XLF is rejecting off the 50 DMA, still range bound though between 35 and 36.5. IWM or the Russell, right on support here. It is right on support. What's going to happen? I'm not entirely sure, but look at the sell bars. They're starting to get a little bit bigger here, so people seem excited to sell. If we can't hold that 415 area, watch for about 207, sorry. The Dow still looks strong. Nice bullish pattern, bouncing off the 50 MA, still above the 50 MA. Looks strong to me. We can move our lines up here to show that we're range bound between the last two previous all-time highs. 342 to 351, roughly $10 range. Gold, I love gold. So looking here at gold, green on the month, nicely green on the month by 2%. So dollar strong, gold is strong. There's a flight to safety happening if you know what to look for. This looks really bullish on the monthly here. I'm not sure what's going to happen, but I think it's going to advance higher. I think it's a really great head trade now too. NYSE is now, again, range bound between 16.2 and 16.4 below the 50. QQQ. Losing the uptrend here, but clearly bullish, well above its previous all-time high. So again, if it was to dive down to the 50 MA, ironically, the previous all-time high at 342 also corresponds with that yellow line now. So that's about another 4% drop from here. Heavy weighted on trillion-dollar companies. If they drop in the next week, they can rally up after earnings. Fade it into earnings, jump it up after. S&P, right on the daily uptrend here. We'll circle back and talk about this one a little bit more. EEM, range bound, rejecting off the 50. FXI, weak. SPX, we talked about enough. RSP, we talked about it. Looks just like the DAX. It's just going sideways. It hasn't been doing anything since April. Why? There's no trillion-dollar company weight in there. TLT, catching a bid here. So that's the 20-year note, right? We're focusing on the 10-year note. RKK, bouncing off the 50. What's going to happen? I don't know, but it's very interesting here. There's big bearish bets that happen as well, right? TNX, the 10-year note, coming back down here. So again, 1.3 roughly corresponds with that 1.3% we saw over here. So again, 1.294, right? 13.00, so that 10-year note continues to come down. We're going to be watching really close what happens to 12.5. Bitcoin, it's just going down real slow. It pretty much looks like the 10-year note, right? XLV, really, really, really strong. Notably strong. XLU, a huge curl here, right? Back testing the red line, moving over the 50. Looks strong. Looks like it wants to advance with bull volume. XLU looks nice. The VIX appears like it wants to break up here. And that is it. Quickly looking at the S&P to wrap things up, and then the rest of this is going to be on the private video afters. Let's look here. We're starting to form an inverted hammer, but we're still higher than the open of the month. We can push down to a low of 415 because 414.7 is the previous June low, which means that anything above 415 in the calendar month of July would be a monthly higher low. Losing 427, 428 is going to be our warning. Losing 427 would be confirmation that we're likely going to start advancing closer to that 421. We can also note 428 was the break even for the 430 calls on Wednesday, and 427 was the break even level for those puts into Friday. So if they want to close out the weekly candle at about 427, 428 or lower, I see that as actually being a support test on the monthly. Looking here on the weekly, 427.5 is that exact same area. After that, we got about 423, and then we got 420 as the uptrend going into next week, roughly. 420, 421. So if we lose that 427, that means those puts are now in the money. Looking at the daily chart, bouncing off the uptrend, the green line here, 427.8, roughly 427, 428. Looking at the hourly, we're now starting to see some bear volume. Right? So we start to see some bear volume here, and we're cascading down. It's not that bearish yet. We bounced off 431. We still have an inverse head and shoulders formed here. Got some red bars though. So I'm going to leave it there. It's been a longer video. I want to thank you very much for tuning in. And I wish you all the best of luck into this next week and the rest of the month. A lot of information jam-packed into here. And as a reminder, please smash a thumbs up. And if you drop a comment, you're automatically qualified for receiving that $100 Amazon gift card. Thank you very much. And I look forward to seeing you next week.